Hi everyone. You're welcome again to another exciting time of learning. Um, my name is Kelechi Kelly Adili, your SAPS for HANA Finance consultant. And if you follow me, you would know that what we do is basically sharing knowledge and supporting others in the SAP environment. My core focus is within the finance and controlling stream. And today we're actually going to be looking at a very, very important topic in SAP S/4HANA Finance. And why not? If you find this video interesting, I would appeal that you share and you subscribe to my YouTube channel, and because to get updates and as much as possible, we're actually going to be sharing more details into SAP S/4HANA Finance and Controlling. But for today, we're looking at a very interesting topic we call the variant or variant principle. I know that and this course, of course, is very important for both those who are new to SAP S/4HANA Finance, those who are actually already consultants, and those who basically want to know more about what this concept says. So you're welcome to, reach out if you have any further questions. My WhatsApp number is actually on the screen, and also you can see my email address if you probably want to ask more questions or you want to find out about our trainings and some other things I do. Why not? You can reach out to me. All right, guys, let's move into the course for today. So, like I've said, the training for today is called the variant principle, and the variant principles basically in SAP S/4HANA Finance talks about three key activities: the posting period variant, the field status variant, and the fiscal year variant. Now, basically, if you are a finance consultant and you have done configurations, there is no doubt that these are very important pillars of finance configuration, right? Immediately after you sort out your enterprise structure in finance, the most important thing that you should be looking out for is your posting period variance, your field status variance, and your fiscal year variance. Now, before you get to this point, of course, if you're actually in an end-to-end project, probably the finance BAs or the finance consultants would have gathered requirements from the business about, first of all, um, um, what are the posting periods. The next would be the field status, their fields and what fields are mandatory and what fields are optional. And of course, what is their financial reporting year? That's what basically we look at when we talk about the fiscal year variant. These are core foundational issues in finance, and it's expected that during the requirement gathering session, this information would have been elicited from the key users or the business and made available to the finance consultant during configuration. Now let's go into the topic and see what these three principles are, why they are very, very important, and why you need to understand how they fit into the enterprise structure for finance. Okay. Now the variance as a word in SAP S/4HANA is a group of settings which is used for execution of operations in systems or for assignments to company codes. SAP provided standard variants as per the requirements for client according to client specifications. And one thing you must know about variants, and of course, and you would find in your certification exam, is that variants are created at client level. What does this mean? It means that they are available to be used by other convening codes, within that client. So if you create, for example, if a fiscal year variant for company code A and company code B feels like it can adopt that, company code B is actually free to adopt what company code A has created as a variant. That's the idea behind client when you say things are created at client level. Now, the variant principle is a combination of three steps, right? So if you're within the variant, if you're actually doing any configuration at the variant principle areas, then you actually basically go through three steps, and I'll probably go into the system and show you these steps. First is to create the variant. Second is to maintain the values of the variant. And third is to assign that variant to a particular compiling code. So, so that's basically the three steps that these variance principle go through when you're actually working with them in the system. Now, SAP S/4HANA Finance, we use variants to make assignments for the following objects in compiling codes. And of course, variant principles are assigned to compiling codes, which means that's the basically lowest level, within your enterprise structure. First is the posting period variants. That's listing the three types of variants we have. The second is the field status variant. And the third is the fiscal year variant. Now, if I exit my screen and try to probably show you what I mean by those three steps, if I go to SPRO, for example, and try to go to the config screen, let me just share my screen so you can see that. Yeah, I believe you can see that now. So go to SPRO, go to SAP reference ING. So if you go to financial accounting and you go to financial accounting global settings and you go to ledgers, now you can see the three, if I go to fields, this is the first variant. The second is the fiscal year and posting period. So if you come here, you're going to see the second variant, and of course, you're going to see the third variant. So these are the locations of these variants. Of course, there are T codes, probably I'll share much later for these variants, but like I said, you can always find your T codes if you go to technical display information. And of course, if you look at the four last digits, that will give you the T code for your customizing objects, right? So sometimes I don't have to cram these codes, I just know how to get them. So you have learned one thing now. In case you don't know, you can find your T codes within your configuration objects. All right, so let's go back to where we were. And so we have actually listed these as the three variants we have. I'm just going to continue. Okay, now let's look at the first one called posting period variant. When you hear the word posting and period, they look like two words that have come together. But when you hear the word posting in SAP or any other ERP for that matter, it means an action. It means that you have entered certain information within a document and it's time for you to post or execute that transaction, right? So when you add that to period, it means a time that has been set out for you to actually do certain postings within a document. So the posting variant is used to open and close accounting periods for each account type and for all account types. So the idea is that, like I said, posting and period, right? So what controls how you post transactions into different periods, posting and period. What controls how, what, if for example, you're expected to post a transaction in January and you're in February, and for some reason, the controller has closed the month of January and you try to post into January, the system is going to tell you that January period is actually closed. So the control that we're talking about, that when you so the essence of the posting period is to control of course at the document level, control what goes into what is posted into each period. And of course periods in finance, we talk, when we hear period, we talk about your month, your financial period, which would be probably from January to December, or if it's non-calendar, then let's say from March to February. But we'll look at that when we come to the fiscal year period. Now, and of course, there are key, if you want to get for the different kinds of account types that are affected when you actually that controls your posting period. We have type A that talks about assets. We have type D that talks about customers. We have type K that talks about vendors. We have account type M, materials, and S for GLs, and V for contract accounts. So basically what this is saying is that these are core documents within the finance stream. If I want to make a transaction or post a transaction to the assets, the document that controls assets, then then the period is tied to that particular document type. So let's go into the system and actually see how this works. So of course, the steps has been given to us. I'm just going to go into the system now and show you how that works. Just a second, I'm just going to share my screen. Awesome. So I'll go to SAP reference ING again, go to financial accounting, and go to financial accounting global settings, get to my ledgers, go to my fiscal year. Then here you're going to see posting periods, right? And like we said, the first step, you define, you assign, and you create, you define, you assign. Now, if I go to just to show you the different account types, I won't probably take you through the configs. If I go to assign posting periods, sorry, not assign, if I go to open and close posting periods and I put my posting period here, posting period variance. Now you can see that the account types here represents the period that is available for those accounts. So if for example, A here means assets, it means that the account ZZ here means this is available, all account types, it's open for all accounts. Then my period here says January 2024 to December 2025. Right. So what it means is that this document type called assets, right? My period, you can post transactions within January to December. All right. So if I change this to March, for example, it means automatically that I cannot post anything from January to February. So the period that is open here would be from March to December. So this is actually a very important variant that controls access to posting to different types of documents. And we have said that the document types that controls this is your assets, your customers, your vendors, your material, your GL, and your contract. And these are very important transactions. Of course, we talked about the special periods, which we're going to see when we discuss more. So, but this is how the system works with your variants, especially for the posting variant. So if you want to control posting to any documents in SAP, you just have to use your posting periods. For example, if I don't want anybody to post anything in my probably customer invoices or customer accounts or anything that has to do with customer transactions, I want to restrict the period. So all I will need to do is to come here and of course track the periods. And that's the essence or the purpose of the posting period variant. And of course, I've actually just put a screenshot here to show you, what the impact looks like. The next we're going to look at is field status variants. Field and status. So if you put those two words together, it tells you that a field is where things happen. It's in SAP, it's an environment where you carry out certain tasks, right? And status means that what is your current status with those tasks that you're carrying. So field status variance is used to group several fields into one field status group. In the field status group, a field can be defined as suppressed, required, optional, and field status group, of course, is maintained in the GL master data. So, so have you ever experienced where you are trying to post a transaction in a certain field, and of course you have a message that says that this field is required, you have to provide information about that field, or else you will not be allowed to process your transaction. What controls that? That control is coming from the field status variant. So I'm just going to show you that on the system. We'll see how that works. Okay, so again, I'm going to the second, like we have said, the second variant principle is the field status variant. So if you go to field, you probably you're going to see field status variance. Okay, I think someone is here now. Let me just do this very quick. Just a second to make sure. Okay. So trying to make sure I have access to this as soon as possible. So that we can just check and see. Okay, so let's just check this very fast and move to the next thing. So if we do this, yeah, so when we go to, for example, my field status variance is SOX, select SOX and go to field status group. Now, if I select cost center, for example, which is a field status in the field status group, and I just double click on this. Now, if I go to general data, for example, now these are, so if I am creating a text, so let's say, for example, I go /OFB60 and have, you see this text box? What controls this text box is the field status for text, right? So you see text is an optional entry here. If I make text a required entry and I save that, and I go back and open this document, just exit, come back, and I'd say FP60. Now, what it means is that I must provide a text if I'm going to process any transaction. So if I just take this as an example, and I don't put any text here, and I just do the amount, click on enter, and okay, so you can see that immediately I click on enter, there is an error here that says an entry field is required in item text field 4002. So what it means is that I need to provide a text at this GL line item. And take note that, like I said here, the field status variance is being managed at the GL account level. So anything, that's why if you go to your chart of accounts one of the fields that are required in FS00, your chart of accounts, when you're creating your accounts, is your field status. So if you do not provide a text, you won't be able to process this transaction. That's the very important function of the field status variant. So the field status controls how you interact with your GL master data. It's very important to know that. And the last of them is a fiscal year variant. Now, according to SAP, financial accounting year is referred to as a fiscal year. In SAP S4, in SAP, fiscal year contains 16 posting periods. Out of these, 12 are your normal posting periods and 4 are special posting periods. Every organization records business transaction in a set of books, and they have to close their books in a certain period. So it may depend on the company and the country's policy. For example, all companies in the US must close their books as at 31st of January every year, and our companies in Nigeria can choose to close their books on the 31st of March every year. So it just depends on company policy and, of course, country regulations on what your fiscal year should be. In SAP S/4HANA, fiscal year is classified according to the following. First, we have the year dependence. The year dependent fiscal year refers to as a fiscal year that is only applicable to a particular year, such as 2026 or 2027. If you select year dependent box in the fiscal year variance, then you need to create a conversion for every year. So it means that it is year specific. Year independent fiscal year refers to a fiscal year that is applicable to all financial accounting fiscal year. Calendar year basically talks about when you start your period, probably from first, you can do January to December, March to April, depending on what your calendar is. But calendar year basically speaks to January to December standard. Non-calendar year speaks from any month from January to December. So we're looking at, so calendar year, as we have established, is January to December of that same year. Non-calendar year can spill over to the previous year. So we can have March 2024 to February 2025. That's a non-calendar year. And shortened fiscal year is a fiscal year that's not up to 12 months. So you can have different scenarios when you talk about your fiscal year, period within the system. So let's go into the system and just see where we can work on this and the effect it has, as we have seen with others. So just a second, I'm going to share my screen. Okay, so if we just say /O, you go to SAP reference ING with financial accounting, accounting global settings, go to ledgers, fiscal year, and you go to your you can go to your edit fiscal year. Go to your maintain fiscal year. So you have periods, period text, and shortened fiscal year. So these are the variants we can have, right? And we have seen that this is a calendar year. This is a year dependent. This is a number of periods. This is number of special periods. This is the fiscal weeks. This is the offset before the fiscal weeks. This is weekly. This is period based on quarters. So of course here, for example, you have if this is ticked, this means that this is a year dependent and is focused on just year. So it's either 2025, 2026. So you can see this is 2 years. It's not depending on periods, it's depending on years. If you look at calendar year. So you have this tick. It means it's dependent on periods, which is months. So you can have, so this 12 means that I'm having normal calendar period of 12 months, and I have four special periods. We're going to look at what we use special periods for. And of course, we have shortened fiscal year that can also be less than 12 months. Okay, so let's just go back. Okay, yeah, so basically the special periods in SAP it's used for doing your year-end activities. Yeah. So the idea is that of course by practice nobody ends the year, closes the books at the end of the year, right? There always be transactions like prepayments, accruals, and bank reconciliations that spills over to the next period. So let's say, for example, the fiscal year is January to December. At the end of December, you still have some transactions that you need to wait for before you close your books in the next year. Example, bank statements, or example, depreciation. So what SAP has done is you now have SAP has provided that you have, like we said, 16 periods. Out of those 16 periods, four are special periods. Within those special periods, you're expected to do your, audit, go through your financial audit for the year, um, go through your financial audit for the year, do your audit adjustments, fine tune your financial statements, and make sure that within those periods, your financial statement is ready. So that is basically the fiscal year. So I've showed you, of course, these articles on how to assess your fiscal year variance. Um, and of course, if your fiscal year is closed, you can also post transactions with your special periods. It will not go into the close period, but it actually stay at the last period of your fiscal year and to be part of your books. So thank you for finding time to listen to this video. I hope it's useful to you. Um, that you understand the variant principles. They are also very, very important topics when you're writing your certification exam, and they are key to finance configurations. Yeah, and don't forget that these are very important objects that control the way we do our work, do configs within finance. Yeah, so thank you very much for watching. Of course, you can reach out to us for if you want to do training on SAP S/4HANA Finance, controlling. We also have a training we call SAP Technical Training for Functional Consultants, just to give the functional consultants some feel of what the technical aspect of finance is. We have a full-time internship program, and of course, we have our SAP Business Analysis training where we dig deep into project management within the SAP environment. So thank you very much, everyone, for listening in. Don't forget to share, like, and subscribe to my channel. And see you again in the next episode. In the next episode, we're looking at currencies. We'll be looking at organizational structures, controlling a lot of topics on finance, basically. So stay tuned, and thank you for finding the time to listen. And don't forget to share and subscribe. Do have a lovely day. Thank you.